Hello traders, this is a recap video for Tuesday, April the 14th. Gap up and go price section today, another gap, a true gap up this time, and the gap here that we had between these two candles is now going to be this one between Monday and Tuesday candles. So basically this today, which includes this one, this smaller one from before, and that's going to be on our charts marked as gap 23,757 to 938. Market made yet another higher low yesterday, and now we have this here situation that we do have the bounce from 22,240, spike below, higher low both on index and futures, followed with two other higher lows, and we do have now two gaps below the price and these two above the price. So the only question here is that the market is spending time under daily 200. Can it break above it? Is all of this just a prep for a breakout, since US market already did that? And this is the comparison now update of the chart that we were having today as a third chart in the charts PDF file. So that gap up on S&P and Nasdaq seemed like one of those gaps on DAX, but then different thing happened, because as we can see, those indices just made higher highs in the previous few days and also had a true gap up and go today. Now these candles are not yet closed, and as you can see, there is a very small room on the S&P up to the all-time high. Now what is interesting here, that this price here, when we observe S&P to the left, and these prices from here, that was the prices when oil was between 60 and 70. Now oil is plus 100, and yet the price is still here. So those correlations, especially index with some other commodity like oil or gold or something else, isn't going to be there forever, or is it going to be something that you can lean on for extended period of time? So this is now the new reality. Probably a lot of short covering is behind all of these moves here as well. Now back to DAX. Eyes for us can still be on gaps, but basically the most important thing is eyeing the situation here under daily 200. Can it break above or not? One of the untested closes is tested. That was this one from Wednesday, April the 8th, while gaps remain. Now let's go to the smaller chart time frames and discuss our opportunities for today. So here I'm having a comparison between CFDs and futures 5-minute chart. I will use this futures chart to the right only for the sake of VWAP and for the sake of fib retraces, which were very useful today, given that the bias was neutral bullish, meaning buy the dip. Look at this. Very clean bounce from VWAP on a blank chart, but that is also broken R1 zone acting as support, and also 61.8 fib retrace. But let's start with those early setups first. So this was a so-called before chart looking like this. So this was here a pre-market session, and pre-market session was completely above the previous close. That kind of pre-market session is the one that is net long, completely above it. So inventory correction would be down toward previous close, while a lack of inventory correction, which is the thing that we got, would actually confirm that pre-market strength. And that's exactly what we got today. So this is again another way how to confirm is market strong or not. Then what you can also see here on the CFD part of the chart, that entire RTH session is above the opening level, and every test of the opening level was a bounce. What this also was, this was the open drive, and none of the candles on this 5-minute candle didn't test open in that early RTH session. The test was only here at 11:45, immediate bounce. Later, some marginal lower low, more bounces, more confluences as well. What was written here in the lower part, buying on strength or selling on weakness, you need to see that strength or weakness. Today we got buying on strength, and we also got VWAP and open, pre-market midpoint, interesting, and pullback trades that need momentum and confluences. We got confluences for all pullback long trades, which I'm going to show you. In the department of dips to watch, we didn't get these classic dips, which are going to start with a spring below the pre-market lows, simply due to the market strength and holding above the opening level. We got those dips on strength. So first thing, there was no follow through below pre-market midpoint on this spike, opening spike down. So that could be used as a aggressive long with the bias. Also, no inventory correction, so that could be here. That could be long from the pre-market midpoint, like aggressive long from the pre-market midpoint. Then R1 fade could be attempted. It wasn't really given much, but this was a doable trade, and this one as well, which would be they are testing the upper end of the R1 zone and also tagging daily 50. So two references together and some day trading reaction. However, this really didn't get any kind of downside follow through, and buyers were on dips, and this would be that. So going along on the first RTH dip, it is simple, making a Fibonacci retracement from the RTH low, which would be this spike low. So from the tagged pre-market mid, basically from the pre-market mid up to this 940 high, and you would have Fib retraces there, 50 halfback, no downside follow through, long. And before this happened, it is at this point here in time, it's already like 10 a.m. That first hour of RTH session showed no inventory correction, no follow through below the pre-market midpoint, and our bias is neutral bullish. So market is actually showing you that it is strong, and bias is by the dip. So that's the thing then to go for. The spike at 11, this wasn't really easy to trade around, but then a market went down and tagged the opening level. So this would be classic setup from the playbook. Extended move into the opening level. In this case, it was an up move and then extended right into the opening level, which was tested for the first time. Decent bounce, and this would be also like a zone to zone trade. There is a zone there, pre-market high and opening level. From those three references up into the next zone, which was a broken R1. Next setup would be again going along there, because if we make a Fib retrace, which I'm going to show you here, from this move 730 up to 11, here would be at 1240, 61.8 Fib retrace. And that's that pullback long with confluences, the one that you need. Again, good setup, but at 1240. Yesterday, those good longs came in a period between 2 and 3 p.m. Today, a bit earlier, but still there was nothing, let's say, clever, under quotes, to do in the first hour of the RTH session, or in the first 2 hours. We had to wait for the better setup, and that better setup was this, because this is confluence. You have 61.8 pre-market high, opening level, and the zones. This is basically the opposite of our setup on weakness, which would be pullback to the pre-market low. This is setup on strength, pullback to the pre-market high. You can invert the chart, and then you will get the clear idea how those two setups are the opposite setups. Now, this here was PPI spike. Now, 2 days ago we had a CPI, and what CPI did? This CPI spiked and went quickly down. On that spike, that they also hit something interesting, and PPI spike also hit something interesting. They almost hit daily 200. They tagged the untested close, and as you can see that they are in deflating, you could jump in immediately to grab something. So this is like hit and run trade. Also, what was written here is that as long as the market showing strength, don't overstay in short setups, go for hit and run or zone to zone targets. Because bias is by the dip. That means sell setup really need to be something quality. Either if it happens, you can just skip and wait for longs, or you take it but not to overstay. Market was strong entire day, so no need to overstay in the short setups. Next short setup would be this, because this is in line with our concepts of news-driven moves, which says that price will likely react from the origin or from the spike high, spike low of the news-driven move, and this would be the spike high. And you can see also that this one, like many others, retraced completely. So it went up, then retraced, and on the other attempt they take the spike and retrace that move, so nothing happened really, like nothing was there. That was the fate of the PPI move. But this pullback down was again a viable one. Why? Because now broken R1 zone and broken daily 50 can serve as supports, and all of that with yet another 61.8. And now observe your attention to the futures. Here we could make a trend line like this. That would be this one. So this spot here at 7:30 and this at 12:40, those are the anchor points, which means this is the first test. So this here pullback also has first test of a trend line, and it is a trend line test to the point, and it is a VWAP test to the tick. This one at 5:15. Very good long setup. Fortunately, maybe too late for the majority of traders to trade at 5:15 p.m. However, many references going into your favor. You have bias, you have strong market. Market is using broken references as supports, and VWAP and trend line and 61.8 fib retrace. This would be first one, 61.8 for this one, and this would be the second 61.8. Now from here to here, see? So these things were good for longs with confluences. Confluences with zones, levels, trend lines, 61.8s, and by the dip bias. So I hope you got some of these longs. This and this were basically trades of a day, while fading the R1 zone and fading the R1 zone with daily 50, although something that is high odd to get, we still got very small pieces here, like 40 points. And again, this here setup, when we invert the chart, you see that would be that classic setup on weakness, break, pull back to the pre-market low, continuation, while on strength it is a breakout on strength, break, pull back to the pre-market high, continuation. But again, the more the merrier. Here we didn't get just pre-market high and just some pullback to the pre-market high, but that was 61.8 pullback, and there was a zone, and there was the opening level as well. So that would be it about this edition of DAX Recap videos. I hope you got some of these entry points, and as always, I wish you a pleasant evening and good trading.